If you're considering an Ottawa real estate investment in 2026 and you're trying to make a justifiable decision, not an emotional decision, well, this video is for you. Ottawa doesn't reward hype, and it doesn't reward speed, and it certainly doesn't reward speculation the way some other cities do. Ottawa rewards patience, fundamentals, and an alignment with long-term demand. And today, I'm breaking down 10 Ottawa-area neighborhoods with the strongest long-term investment fundamentals. Not predictions, not promises, but places where capital, infrastructure, jobs, and population trends are converging. And this is how, in my opinion, educated investors think. So let's get into it. Before we talk neighborhoods, we need to ground ourselves in a bit of reality. Long-term real estate appreciation in Ottawa typically comes from permanent employment anchors, major public infrastructure spending, redevelopment and intensification, population growth, and of course, time. Ottawa is a slow compounding market, and that's why the best opportunities often look unexciting in year 1, but very obvious in year 10. And that's the lens for this particular list. And if you're new to the channel, my name is Mark Belanger. I'm a realtor with Metrocity Property Group. I am also a licensed exempt market dealing representatives, and I work with buyers, sellers, and investors who care about risk-adjusted outcomes, not necessarily looking for headlines. And everything on this list is based on fundamentals and not speculation. And just as a reminder, Metrocity Property Group is the largest EXP team in Ottawa. We do about 600 transactions per year. We have a full team behind us, and I'm sure we can help you out along your real estate journey. So let's dive into the first area. And to get us kick-started on our list, coming in at number 10 is Russell and Embrun. And Russell and Embrun represent a classic outer ring affordability expansion. And from their perspective, they offer faster population growth than in Ottawa proper, a lower entry pricing, and a strong appeal for first-time homebuyers. This is not a flip market. It's an entry price plus time investment where affordability creates the demand. Demand creates liquidity, and liquidity creates appreciation. Early stage growth markets like in Russell and in Embrun, they reward the patient and they punish the impatient. At number 9 is Stittsville, and Stittsville benefits from something investors really love. That's clarity of demand. And why it works for Stittsville, it's pretty obvious. It's family formation, proximity to Canada and the tech sector, there's strong townhouse and detached home demand, and there's established schools, retail, and services. And from an ROI perspective, there's a broad buyer pool, there's stable rental demand, there's consistent resale liquidity, and Stittsville doesn't surprise. And that's a feature, not a bug. At number 8, we're looking at Orleans, and I'm talking specifically about the Trim Corridor or the transit-driven repricing sector of Orleans. And Orleans remains one of Ottawa's most misunderstood value plays. And remember what we were talking about at the very beginning, it becomes very obvious when you think about it. This part of Orleans benefits from LRT Line 1 East extension, strong population density, family-oriented demand, and a relative affordability compared to West End suburbs. Transit doesn't just shorten commutes, it reshapes buyer psychology. And this is a connectivity-driven appreciation story. And at number 7 is Riverside South. Same kind of deal as in Orleans. Riverside South is a textbook growth meets infrastructure area. And why it matters? Well, South LRT extension is now operational. Ongoing household formation. Schools, retail, and services are scaling up, and proximity to the airport and employment corridors. This is not about timing peaks. It's about entering before the area feels complete. At number 6 is Vanier, and we often like to sort of joke around with Vanier, but the truth is Vanier is a classic reinvestment corridor, and its strengths come from its proximity to the downtown core, obviously, but more importantly, it's the infill development. anybody looking to improve the facilities, and if they're handy in any kind of way, this is a gold mine. It's also trying to improve the commercial corridors. This area rewards renovation strategy, holding power, investor discipline, and corridors don't change quickly, but when they do, they rarely go backwards. The very first sale in real estate that I've made in my career was a bungalow, a wartime bungalow on a huge lot, R4 zoned, that they've then demolished and built an 8-plex. That was my very, very first real estate sale in Ottawa, and it happened to be in Vanier, but that's the power of redevelopment in the Vanier area. We are now getting into the juicy part of my list. We are now cracking the top 5. At number 5 is Alta Vista. Alta Vista is one of the most institutionally supported neighborhoods in Ottawa. It has key anchors like the Ottawa General Hospital, CHEO, there's proximity to Herdman, train yards, and of course, downtown core, the glebe, all the activities within the glebe, etc. And why does this matter? Well, hospitals don't relocate. Employment demand regenerates annually. Rental demand is consistent and resale is protected. And if you add in the stock for bungalows, renovation and densification potential, and you get low volatility, long-term performance. Number 4 is Carlington. This is a once-in-a-generation infrastructure story. The new Civic Hospital campus introduces major public investment, long-term employment density, redevelopment pressure, infrastructure upgrades, and historically, areas surrounding major hospitals see increased rental demand, improved amenities, higher redevelopment interest, and this is a multi-cycle investment, not a short-term play. Number 3, this one is obvious when you think about it, is Canada North. Real estate follows jobs, especially high-quality jobs. And Canada North is one of Canada's largest tech employment hubs. It has hundreds of companies and tens of thousands of high-income jobs. And with that comes executive rental demand, strong resale liquidity, and insulation during market slowdowns. Employment density is one of the most reliable real estate fundamentals there ever is and ever was. It's obvious that this cracks the top 3. And at number 2, again, another obvious one when you think about it, is LeBreton Flats. And LeBreton Flats is not a single project. It's a city building at scale. And its key drivers in LeBreton Flats, again, this one is obvious, but think of the arena district plans, mixed use intensification, waterfront access, transit connectivity, downtown proximity, of course, all the fun and entertainment, and district scale projects like this create uncertainty early, but they create value later. So patient capital tends to win in areas like LeBreton Flats. I made a full video on LeBreton Flats going into a little bit more detail. Check it out at the end of this video. And before I get into my number 1 area, I just wanted to say a little bit of a disclaimer that we should always be looking for ways to unlock value in your home. And sometimes the value is sitting there in plain sight, like we talked about in the Vanier section. If you're sitting on an R4 zoned property, this might be interesting for anybody thinking long-term that has, maybe they're not the most handy person, but the person who is potentially buying that particular lot, because they're typically larger, they will see the value in having an R4 lot. Or think of things like SDUs, secondary dwelling units. Think of things like coach houses. Again, if you're sitting on a lot that's just a little bit physically larger, the possibilities are endless. And if you can see into that, that is where easy money can be made. If you see it and you want to act on it, great. Or when you're selling, we got to make sure that we position that particular value in a way where the buyer obviously recognizes it, but they know that we know that that is a particular gold mine. So again, look for stuff that is sitting there in plain sight, and you can use that to your advantage. And at number 1, this shouldn't be a surprise for most watching on my channel, is Westboro and Hintonburg area. This particular area sits at the intersection of 3 powerful fundamentals. Number 1 is scarcity. These are mature, built-out neighborhoods with limited land supply. Scarcity supports long-term pricing. Number 2 is lifestyle demand. Walkability, retail, dining, transit access, and river pathways create demand that regenerates in every cycle, not just during the boom cycles. And number 3 is income density. Professionals, dual income households, and downsizers constantly compete in the Westboro area. And from an investment perspective, has strong resale liquidity, stable rental demand, renovation and redevelopment upside, and resilience during market slowdowns. This is not a speculative area. It's a blue chip residential market inside of Ottawa. And that combination is why it earns my top spot on my list. There you go, ladies and gentlemen. I'm going to wrap up the video here. This list isn't about copying someone else's strategy. It's about understanding where long-term demand is strongest, where risk is best compensated, and where patience is most likely to be rewarded. And the best investment is one that fits your budget, your timeline, and of course, your risk tolerance. And from my perspective, the way we get started is if you go to markbelangerrealty.com, again, markbelangerrealty.com, and take the readiness quiz. It's really there, it's free, and it's designed to get your thoughts started on where you might have biases or where you might have or need a little bit of help. So take the readiness quiz, and when you're ready, reach out to me via my Calendly link. Let's have a conversation. Let's discuss your goals and your objectives, and then we strategize and we put a plan in place for 2026. So I hope this video helped. I look forward to putting these videos together on a weekly basis, now twice a week on my channel. Until the next video, stay smart, stay invested. I'll see you in the next video.